One thing you might not know is we have the most volatile stock in the S&P 500. If you took all 500 stocks in the S&P 500, you said, which is the most volatile? We're like 100 vol. The S&P, the VIX is like 15. Most of the Mag 7 stocks, they would be like 20, 25 vol. Bitcoin is 50, so it's like 3 to 4 times the volatility of the S&P index. MicroStrategy, we lever the Bitcoin, so we get 2x that, so we get to 100. And conventional investors are afraid of volatility. They fear it. They're like, I can't handle the volatility. But volatility is like RPM in an engine. It's like spinning at 100 RPM instead of 10 RPM. So if you plug volatility in the Black-Scholes equation, the options are a lot more valuable if you have volatility. So when I'm selling a convertible bond, it's got an option attached to it. So if you're an investor, you want to buy a convertible bond from a company with large volatility, large liquidity, and durability. You want to know the company's going to keep going. But if you think about liquidity, that's like energy. So like maybe I spin that little Merry Christmas hat, at 50 RPM. It's a little kid's toy or a little balsa wood propeller on your kid's toy. But if I take a baseball bat and I spin it at 100 RPM, it's a weapon. But if I take a 20-ton flywheel and I spin it 100 RPM, it's a turbine. I can move a ship. Well, now we have $30 billion worth of capital, and when we're spending it at 100 vol, that's a huge opportunity for options traders. So there's a massive options market, a massive amount of liquidity, a massive amount of volatility. And so the convertible arbitrage guys, let me say it a different way. If you have 100 vol, you can generate 100% interest just by selling the upside.